And we are officially live. Welcome to Money Matters with me, your host, Nev. I'm beyond excited to share with you what I have been able to find. Look, there's been a lot of news happening. Anywhere from what's happening with the Fed Powell telling that he's not out of ammunition, and there's all kinds of crazy things that they're proposing to do. And we're going to be, of course, looking at some of the charts and data, including people being laid off and continued problem with unemployment. And then finally, we are going to focus on what's happening with Facebook. Yes, Facebook has been very, very busy doing all kinds of stuff, and we're going to wrap it up with a bit of real estate news, so you definitely want to stick around for this one. And welcome back. Okay, so let's chat, let's talk, let's discover of what I have been able to find. Hopefully you can see this rather well on your screen. So Fed Powell was on 60 Minutes. You likely have seen it, but if in case you haven't, let's recap of what's kind of been going on. So he's basically saying that unemployment could reach a potential of 25%. Now you will probably hear somebody else sharing a bit different news, and I'm going to actually cover that in a moment. But 25% unemployment, that's depression level. But let's talk about it, and let's kind of see what he was talking about. So he's basically said that the Fed could enlarge existing lending program or start new ones, which is true. They've been starting new lending programs all the time, going for it, doing their own thing. And, that's very much true. They are approaching, trillions of dollars that they are spending with the crisis. And, they're planning to basically be able to reduce interest rates, which, if you think about it, reducing interest rates now that we're actually at zero means we are going negative. And that's one of the things that I have been sharing with you. If you have been paying attention to anything that I've been saying in a little while, that's something that I have been sharing for quite some time. And then the other piece that is being shared here is we could change our purchasing strategy. Well, yeah, we all know that. They already changed the purchasing strategy multiple times, right? So the part of the purchasing strategy of what they have changed is that they are buying now fallen angels, junk, and all kinds of stuff. And when they talk about changing asset purchase strategy, I honestly believe that what they're talking about is changing, not just like changing the purchase strategy component, but this probably means that they are going to go in and start buying stocks. That's right. So that's kind of where I am thinking they're going to go, because they're already buying corporate bonds. They started buying junk corporate bonds. Now I think they're going to actually go in and start buying stocks to support things. Okay? So there you go. That's one of the things that is interesting. So he said now is not the time to worry about the long-term consequences of this debt spree. Powell's biggest concern seems to be potentially second wave of the, I'm not going to say the word because some of the sites are starting to ban you now. And I do want to put this, but, the pandemic, the virus, or whatever you want to call it. So the April to June gross domestic product report will be very, very bad. With an annual growth decline that could be easily in the 20s or 30s. I want you to think about that. Imagine that the gross domestic product does go down 20 to 30%, and I will show you other reports where they're actually talking about that being a bit more. But he's expecting that there will be a few more months of net job losses, and he is expecting that the peak is going to be 20 to 25% unemployment. Now, of course, he said that this is nothing like the 1930s and the Great Depression. What he's saying What he's saying, I need you to pay attention to what he said. He's not saying we're not going to get into the depression. He's not saying that this is going to be the worst depression that we've ever experienced, that it's going to be the greatest and the biggest depression, which is what I've been calling since, like early March? He's saying it should be a much shorter downturn than we would associate with the 1930s. Okay, the Great Depression lasted for 10 years, and when everything went down, it didn't actually recover until like the 50s. So we're talking like 20 years of the sort of when it was at the peak, went down, kind of stayed in the slumps, and then by the time it went back to that peak component, it was like 20 years roughly. Mike Maloney actually explains this really well on his channel, so if you want to go check it out, you're absolutely welcome to do that, and I encourage you to do that because it's all about learning and growing. And so let's go in over here to a different report, which is CNBC. Basically is saying that the jobless rate could top 30%, right? So one of the channels, MarketWire, was saying 20 to 25. CNBC is saying 30%. So we could agree that maybe between 20 and 30% is a high probability, okay? So that was one of the things. He is saying he does not see economy entering another depression, but he's saying it's going to be a downturn. And anyways, I don't know that I buy it. I don't know what you think. My thoughts are we're going to go into this depression. It's going to be painful. I don't know that it's going to last 10 years. Who knows? Most of the analysts, most of the people, and I kind of agree with them, expectation is like 2022, 2023. So I'm expecting about 3-ish years of rough stuff. But that's just me. So this one over here, this is an interesting piece. If you are actually watching it, it says the unemployment could soar above 30%, but the U.S. economy will avoid depression-like economic plunge. Now, I don't know how you actually have over 30% of people that are unemployed, but have economy is fine. I mean, we're kind of seeing that right now. If you watched the report that I was sharing with you yesterday, watch the video, economy is down in the slumps, but the stock market is going crazy. The people are still going in and buying real estate, and the prices are expected to go up, at least in a short term, because of the lack of supply, but the demand is still pretty okay. So I don't know. It's just really, really weird to me to kind of look at this stuff and say, yeah, we're going to, see so many people unemployed, and we're printing all this money, doling it out like it means nothing, because clearly it means nothing. But there's no problem. There's no problem. I don't get it, y'all. I don't get it. But one of the things is the central bank chief conceded that jobless numbers will look a lot like they did during the 1930s, when the rate peaked out at close to 25%. So if we're going to have a higher number of people unemployed than we did during the Great Depression, and I will share with you sort of the GDP drop and all of that stuff soon, but if all of that happens, how is it possible that we don't have a depression? It's absolutely impossible. Absolutely impossible. But what do I know? What do I know? It's an interesting piece. Here it says that the efforts have led to 36.5 million Americans filing unemployment. There's another report that is saying that number is closer to 40 million. But I guess once you reach in 30s, what's another few million left? So there goes that. The Atlanta Fed estimated Friday that the data so far in the second quarter suggests a drop. Remember, I told you I'm going to cover this, of GDP of 42%. This has never existed before in recorded history that we know of. I mean, it could have existed before we had the recorded history, but right now it's never it didn't exist up until this point. And it's a really scary proposition to think that the gross domestic product will drop. Like, I mean, 42%. Like, let's round it. If it's easier for you to understand, that's 50%, right? Like half. I mean, it's not exactly 50, right? But this is just the second quarter, y'all. This is not like an annual basis or any of that stuff, which is huge. And I think that, it's going to actually be more than 42%. I mean, I could be wrong. I don't have a crystal ball. I always tell you that. But, I expect that it's going to be actually even worse than 42%. So I just don't get how it's all going to run and how everything is peachy glory without, a depression, right? They're saying no depression, it's just a downturn. That's a softening of the blow, right? Like, let's call it what it is. We're in recession, entering or have entered a depression, because we're entering depression level problems. Let's just call it what it is. But the problem is that if you call it what it is right now, then people will get all kinds of nervous, and that's highly problematic. So that's where that is. So anyways, let's go over and continue with the Market Watch report. This is El Arian. He is an economist, and he is basically saying economy is going to get bumpy. So he has a little bit different information and data, and it doesn't mean that one person is necessarily lying or not telling the truth. I think having a wider range of information and news is crucially and incredibly important to cover and to be able to understand what is going on, right? So El Arian said that the market thinks it's a win-win scenario because the Fed has said, oh, we're just going to come in and we're going to buy whatever it is that you have, right? And so it doesn't really matter if you make an error or buy something that makes no sense, because the market or the Fed is going to come in and buy it. So, you know what I mean? So that's one of those things. Of course, the balance sheet is well over 7 trillion. Now he's saying an estimate of 39 million Americans have signed up for jobless claims. So remember, one of the reports, they said 36.5. This one is actually saying 39. That's in my opinion, that's a big difference. But again, what do I know? He's expecting a W-shaped recovery, basically where economy swings between growth and contraction. So that is one of the theories. I know that some people have been talking about the V-shape, which I've already explained what that is. U-shape, which is that slow kind of recovery back in. I said it might most likely be like an L-shape. And then there was a report that Raul Powell of Real Vision and Macro Trends have talked about the sort of like a inverse square root of recovery, and right, like if you take it, or he said mirror, so what we've seen kind of go up, then down a little bit, and then just flat. So that's that sort of like an L-shaped curve. So people are coming up with all kinds of funny names to call it. The bottom line is we're not going anywhere anytime soon. That's basically what the information is that I want to share with you. Now, before we continue, I do want to actually remind you that we are streaming live on onedealaway.com. So if you go to onedealaway.com/live, you'll be able to join me. I will go live tomorrow again at 7 a.m. covering additional pieces. And if you're watching this on YouTube, you are actually missing a whole lot because you're already too late to the party, right? The party already happened, or is happening right now. But if you're watching on YouTube, that's amazing. But make sure you come back to the channel or to the website onedealaway.com/live and join us here so that we can talk about these things in person and be able to interact. All right, so now let's get back to the news. Oil rises above $30 as deep production cuts rebalance markets. So, if you watched and paid attention, the market was, I don't know why he does this. Oh, because he has a bunch of photos. But anyways, you will see that we actually went down and went negative, kind of spiked up. We went negative again. Now we're back up in the 30s. And it's, that's for Asia. U.S. Futures rose as much as 2.5% after gaining 19% last week. And the reason for that is that the number of drilling rigs is falling and being shut down. But here's the news that I think is incredibly important for you to see and understand, and that is, let me see, this is quite small, so let me see if I can zoom in this just a little bit so it's easier for you to be able to see it and read it. But the number of drilling rigs in the U.S. fell by another 34% last week to levels not seen since before the shale revolution kicked off at the beginning of the last decade, while stockpiles at the key U.S. storage hub in Cushing, Oklahoma, shrank for the first time since late February. So what are we seeing? We're seeing that these things are basically going out of business. So this is a contribution to the slowing down of the economy, to the jobless claims, to all kinds of stuff that is going on, that is happening, and this is kind of what we're seeing. And on top of that, we are running out of storage, right? So the stockpiles are also shrinking. So that means that whatever we have, we're actually doling it out. So we're going to, I think, hit another oil crisis in a near future. Probably not today, but when we get to that and the news started reporting it, we're definitely going to cover it. Now the OPEC plans, they didn't do it, but they plans to halt output from the southeastern oil field. Okay. And the market largely shrugged off U.S. Federal Reserve Fed Chairman Jerome Powell's warning late Friday that stocks and other assets that have rallied sharply in the past month would suffer significant declines if there were setbacks, which, there could be setbacks. And there have been reports that people have been sharing for a while, but for some reason, the smart people in the room are talking about the big problems that they're seeing, and yet you look at the markets and the number of people jumping in because of FOMO. It's absolutely ridiculous, and it breaks my heart because that these people are jumping in. They're buying it at the most expensive time the market has ever had. I don't know if we ever had a more expensive market. And on top of that, a huge problem is that you don't even know what the value is, because if the Fed is going in and buying everything hand over fist, you can't even have a correct ability to understand what the right price should be, right? Like that price discovery goes completely out the window, and it just disappears. And so that's a piece that is really interesting to me, that I'm like, I don't know how people just don't see this, but I guess you don't, and that's okay. So let's go over a bit more and talk about other pieces that are happening when it comes to economy. And here we go. This is, as I said, that unemployment number is going to continue to rise. Powell is saying that, and we're just seeing that now. I mean, we're reopening economy, and now we're actually going to start seeing corporate bankruptcies and major layoffs, and like major problems are actually just coming, because I've been saying we are at the beginning. This is just the stage 2 that we're entering, that I have shared on some of the previous videos. So Uber is expected to begin another round of layoffs on Monday, basically today, cutting thousands of jobs just weeks after laying off 14% of its workforce. Okay, so this is one of those things. This was published actually yesterday, and we're talking about the big problems. JCPenney, JCP, may be going completely out of business. If you look at it, they have, they are going in filing for Chapter 11, and they're filing a prearranged bankruptcy, meaning its restructuring plan has some support from creditors, but not enough to avoid challenges. When you file for Chapter 11 bankruptcy, your creditors kind of have to agree with you to want to restructure the piece. When that doesn't happen, you have to go through a liquidation component, and this goes to the courts, and this becomes very, very painful. And now that we are reopening is finally the time where we can actually go in and see things. And in all honesty, I don't know. I mean, I think that they're trying to go for Chapter 11 because just completely closing it off is really hard. I mean, we're talking about 118-year-old company. But I don't know that people are going to be as crazy about going and shopping and stuff. Like, I think people will get a bit excited to go outside, right? We all see it out now with beautiful weather coming our way. People want to go to parks and beaches. Like, they want to get out. But I don't know that people are going to be as crazy going into the malls and movie theaters and that kind of stuff. So, I don't know, but I fear that the retailers are basically done, and if they can't figure out how to go online and basically follow, I hate to call it, but Amazon model, I don't know that they're going to survive. So the new normal for American retailers is that they're going into the U.S. bankruptcy court this year and next. So this is the part that I was saying, that it's coming later on down this year and next year. And this is not a easy proceeding where you just show up and the next day everything is done and you walk away. Like, it's a pain in the butt for everybody, and it's expensive and it's costly. Emotionally, physically, economically, in every single way. So there are going to be a lot of losses, and so they have this July 14 deadline to kind of come up with the agreement. And they're not the only ones. I've covered many other places. Many of your favorite brands have likely gone through some sort of bankruptcy or going through some sort of bankruptcy right now. From car rental places to outfit stores to just about everybody. But now that we're talking about, sort of I mentioned earlier how you have these retail investors, basically you and I. All right, let me lower the chair a little bit over here. There we go. Let's adjust over here. I was too high. I feel much better over here. So I've already talked about how many people are actually going in and spending a lot of money buying these ridiculously expensive stocks. And yes, technically speaking, the prices have come down. They have gone up a little bit. We've seen that piece, right? Like, you had the V-shaped recovery, and then this part over here is like mountain peak kind of thing. So we've already seen that. But people are jumping in. And then you have large investors like Warren Buffett. Heard of him? Look at this, y'all. Let me see if I can zoom in just a little bit over here. There we go. All right. After dumping all of the airlines, he continued selling. So he's not on a buying spree. He's on a selling spree. And my question to you is, if some of the major investors are going through on a selling spree, why are you buying? Like, why are you buying? What do you know that people with billions of dollars in the bank, hundreds of people researching stuff and delivering things, years and decades of knowledge, are going and selling and dumping, saying, I want nothing to do with this? What information do you have? That's the piece that I want to know. And it's not necessarily like you watching you, because you are here learning. And this is the part that is incredibly important, to go in and learn. You gotta study. And if you're here watching live, you're one of the few folks. I mean, people are still sleeping in. Maybe they're brushing their teeth, probably skipping breakfast, because breakfast is the thing of the past, from what I hear. But you're here studying. And so people that study and learn and prepare for what's coming are people that will do much better than the rest. the rest are resting. The rest of us that are not resting are working and studying, and you're here understanding of what's going on in the markets. So of course, during the annual meeting, Berkshire Hathaway on May 2nd, 2020, and you've likely seen a video that I've done. Maybe it didn't go quite yet, but anyways, you've probably seen some of his stuff that he's done. But he unloaded all of his airlines. Every single piece that he had, he unloaded. Then he sold entire shareholdings of energy company Phillips 66, financial service firm Travelers Companies, and exiting most of its position from Goldman Sachs. Guys, he's dumping everything. He's going into cash. Some sort of storm, like I said, this is going to be a storm of epic and biblical proportions that we haven't seen in our lifetime or potentially ever in a recorded history. Okay, he's going into cash. So there's a reason for that. And while I don't know if necessarily just US dollar holding right now is the best idea, but if we're hitting depression, then it might be a good idea, because dollar typically tends to perform incredibly well, and we're seeing a lot of problems with dollars that there's not enough of them. And so that's the reason why the swap lines are being created with other countries around the world to basically feed them dollars. Now, that's the reason why I do believe in holding on to the cash. I do believe, again, that Bitcoin, I don't make it a secret, that is going to perform incredibly well. So having some of your wealth, in that particular asset and asset class might be a good idea. But, this is not a financial advice whatsoever. You got to do your own research. Gold also can potentially do well. It doesn't do really well in depression level, but everybody's expecting, and I have relatively similar feelings that we might see some of that stuff. Again, we'll see, and it's not unheard of that when you hit, depression, where nobody's buying anything, and then we kind of start getting out of it and start buying, we could actually switch from like the depression model, which is what we're fighting. So we're printing and printing and printing. And you know what? You don't have to agree with me or not, but I think it's a good call of what they're doing. Like, yeah, not printing it would probably make things easier and maybe prevent potential inflation down the line. I don't know, but if they don't do that right now, a lot more people would suffer. Now, potentially the suffering would be short term, but it would be super, 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 super painful. And so I understand why they're doing it. And so, they're just trying to fight it. So we'll see if they'll be successful and if this potentially would cause inflation. And I think it will. I just don't know where exactly. When 2008, 2009 crash came, we saw a large sort of depression. Well, it wasn't depression. It was a recession. Let me correct myself. It was a recession. We saw a large recession, and they printed a lot of money. And we didn't experience inflation in like everything, but definitely in assets. Financial assets definitely experienced an inflation, which is why we saw the prices kind of go up. Anyway, let's go back to Berkshire and to Warren. So they trimmed the holdings of banking giant JP Morgan Chase, Sirius XM, credit card issuer Synchrony Financial, each by about 30%. Now, it doesn't sound like a whole lot of money, because to you 3% might be like in the tens or hundreds or thousands or even maybe tens of thousands. For Berkshire Hathaway, we're talking hundreds of millions, potentially even billions. So that's just something to pay attention. But they here's the major moves of what they did. Look what they dumped. I just want to show this. I want you to see all of the stuff of what they have dumped. I mean, 42.5 million shares, y'all. Like, these are thousands and hundreds of thousands and millions, tens of millions of shares. So that's why I said when they say 3%, like that's not like a small amount at all when we're talking about these companies. And then this is kind of according to the latest form. Here's what is still retained and in what amount. So it still has substantial amounts of money in it. The share prices of selected stock mentioned above Berkshire Retain have fallen significantly. And I wish that I could show you this. Yes, I can. Look at this. This is amazing. Thank you, Investopedia. So you can take a look at where the prices were. They were all roughly, you can see that all of them were roughly at the same thing, and then you can kind of see how they have all fallen. And this is the part I was talking about. It went down in March, and it's kind of slowly, I mean, you can see it slightly going up, but not much is happening. You can see this curve, y'all. Can you see the curve? Like, right? This is the reason why he's dumping, why everybody's expecting that there's going to be a second piece down. All right. And now, the part that I have promised you, what in the world has Facebook been up to? And before we get to the Facebook, again, if you're watching this on YouTube or anywhere else, you're missing the show, y'all. You're missing the show. If you are excited about some of these things, of course you can always subscribe to the YouTube channel, hit the like button and all of that stuff. But I'm not going live on YouTube because A, I couldn't figure out how to do it, right? But B, because I wanna be able to create my own channel where I can say more or less what I want, obviously within respect. I mean, you can watch the channel and see, I'm not saying anything super crazy, but, with all of these shutdowns and censorships and all of this crazy stuff, I just don't trust it. I just don't trust it, and so I want to be able to do things on my own platform. And yeah, I don't have a huge following yet, but that's okay. We all got to start somewhere. And so if you are, interested in learning about financial markets and investing and protecting your wealth, and, how do you get into, cryptocurrencies and buy physical assets and invest in real estate, and, some of these things are poised right now to do amazingly well in the future, but you got to get into studying right now, not necessarily investing right now, because people are jumping into the markets not understanding what in the world they're doing. This is how you lose. This is how you get killed by the markets, and why vast majority of so-called investors never make any money whatsoever, because you do it based off of no information whatsoever. You let your emotions drive you to what you want to do, as opposed to allowing intelligence to say, I've studied this stuff, I understand this stuff, I'm paying attention to this stuff, and now I know what to do, right? So FOMO doesn't become an issue. The prices have dropped. Did I go in? No, I'm not going in. I'm not interested in going in, right? So, you got to check yourself before you wreck yourself, as they say. All right, Facebook. What is going on with Facebook? Facebook has announced, they've been very busy, y'all. I have like multiple articles and reports to share with you of what's going on with Facebook. So they have spent 700, big difference, 700 millions on Giphy user data. So Facebook announced yesterday, May 15th, so okay, when it was announced, so I guess May 15th was Friday. So Friday, Facebook announced that it was buying GIF maker Giphy for $400 million, so 700 million users. Okay, Facebook collects and shares your data with third parties, in case you didn't know that. And its whole base model is based around you and your information. So that's really what they do. The whole model is you as the user, me as the user, and selling our information. It's that simple. Facebook confirmed the acquisition. Giphy users, we're talking about deleting the app, and some of them already have, because they just don't trust the company, and rightfully so. Now, Facebook plans to further integrate Giphies. I keep calling GIFs, GIF, Yeah. Anyways, correct me, please. Help me out over here. ESL people struggle with some of these things, but they want to integrate it into the Instagram and other apps and so on. Now, the article by Medium 10 kind of offers a bit of a scary picture. It says, the acquisition will likely also benefit all of Facebook products from Messenger to WhatsApp, and they will measure of how it's being used and shared. Now that means that Facebook will be able to better understand user behavior in its own apps, and of course, what do? Enhance its ad tracking service. So that's kind of what the expectation is. They want to know how the images are used, where the images are used, who's sending what to whom. I mean, that's like a lot of things that people are using. So if you're wanting to avoid it, which is all over the place, it's basically like, try to use something other than that. But that's not necessarily the whole thing. Now, the second piece that is also interesting, Facebook, like I told you, Facebook has been very busy. So first we have acquisition of the GIF maker, whatever. Now they are quietly helping set up new pro-tech advocacy group. That should be very interesting. So they're working behind the scenes to help launch a new political advocacy group that would combat U.S. lawmakers and regulators trying to rein in the tech industry. Government officials are threatening to break up large companies, and they are going in and fighting and basically saying, we're not all that big. Right? Come on. The organization is called American Edge, and its basically job is to convince policymakers that Silicon Valley is essential to the U.S. economy and the future of free speech. The one that they have been shutting down left, right, and sideways? What free speech? Don't even get me started. This is ridiculous, but then again, I am glad that I didn't write it. This is from Seattle Times, as you can see. The American Edge formed as a non-profit organization and filed in Virginia. The setup essentially allows it to navigate a thicket of tax laws in such a way that it can raise money and blitz the airwaves with ads without the obligation of disclosing all of its donors. And, who are going to be the donors? Well, if it's fighting to preserve the giant corporations, that's who the donors are, y'all. That's who the donors are. There's an interesting piece over here that I wanted to say is that the FTC, the Federal Trade Commission, is probing Facebook in particular for violation of antitrust laws. The inquiries have explored the tech giant's past purchases of former rivals, including Instagram, WhatsApp, threatening a worst-case scenario to unwind some of those deals. But Facebook maintains that the marketplace is competitive. Really? Is it? I mean, maybe, but good luck fighting with it. This is the part of the problem, because you start creating all of these monopolies, and this is what antitrust law was trying to create, and so that's why FTC is trying to fight it. And again, I don't know how you think about it, how you feel about it, so let me know. Please put in the comments and tell me what your opinions are and kind of how you feel about the whole thing. Clearly, my opinions are very, very clear in this video. Now, let's continue. Facebook spending more than $16.7 million last year to influence regulators. And over the last 3 months of 2020, so of the first 3 months, so January, February, March, they shelled out an additional $5.2 million, making it the 7th biggest spender in the nation's capital. Facebook has sought to battle efforts to regulate the way it moderates content online. You mean like the free speech that they are not doing? Anyways, there's a whole lot more, so feel free to read the whole thing. But it's not everything. This is not it. There's an additional piece that Facebook is doing, and I want to share that with you. I told you, Zucky has been very busy. So what else is Zucky up to? Well, geo platforms. Yes. So Facebook is putting a new bet on the geo. So on Tuesday, Facebook announced, I told you, Facebook has been very, very busy. On Tuesday, Facebook announced a $5.7 billion investment in Geo platforms, taking a 9.9% stake in India's largest mobile telecom provider. That gives Zucky and Facebook access to Geo's 370 million subscribers and a strong foothold into booming mobile market. Now, they're basically they started, Geo basically started as just like a phone kind of provider, but they're expanding big time expanding, and this is giving access to some of the large companies, to a whole lot of things that I don't know how I feel about, but you can let me know how you think about it. So, they basically constructed a 4G broadband service network over in India, and became the top-ranked Fortune 500 company in 2019, with a revenue of over $82 billion in 2019. Now, Geo platforms had since expanded into areas like digital currencies and education, planning to open Geo University in 2021 to educate India's next generation areas like artificial intelligence. I need you to pay attention to all these things because all of this is connected. These are, if you ever played the game of Risk, where it's that strategy political game that you play and you have to think 5 moves ahead, this is what this is. This news are news, but it's not just necessarily what's happening right now. What does this mean 2, 3, 5, 10 years from now? This is what's important to pay attention to. All right, let's get back. The major push behind Geo's new partnership with Facebook, however, seems to be the company planned launch of nationwide GeoMart e-commerce platform. You've heard of Alibaba, right? What Alibaba is for Asia, for China specifically, that's what Geo is trying to become for India. And if you have been paying attention to demographics when it comes to the two countries, China, while the largest country in the world, is because of the one-child policy for so many years, they're actually starting to lose in the demographic race, and they're going to start getting smaller while their aging population is going to become huge. India, on the other hand, is growing at a rapid pace and is set to basically overcome China. So this is a huge move and something you should be paying attention to. When we talk about Geo, there's another piece that is also interesting to note, is that Facebook is not the only giant going in and buying. However, let me see if I can zoom this in again. My apologies. All right, here we go. Beautiful. Oh no. Where did it go? Come back. Where did it go? Oh my gosh. Sorry about that, y'all. All right. Where they basically are General Atlantic, the U.S. investment firm that helped fund Airbnb and Uber, will invest about 66 billion rupees or 873 million in Reliance Industries Geo platforms. The deal to acquire 1.3% stake value Geo platforms at an enterprise value of 5.16 trillion rupees or 68 billion, the company said. The transaction takes the total investment raised by Geo to 671.9 billion rupees after it sold stakes to Facebook, Silver Lake, and Vista Equity Partners. And they're basically betting that the huge consumer market potential to shake industries, right, fighting over the foreign technology giants. And so they want to become basically the huge technology giant to go, with the e-commerce to fight the Amazon and Alibaba to become another ones, and to fight Walmart and, want to kind of take over Google and that kind of stuff. So it's going to be an interesting piece and sort of fight to it. And, so anyways, definitely worth checking out. I don't know if Geo Platforms is a publicly listed company. I wish I did, or maybe Reliance Industries is. So who knows? If you're interested and you wanna gamble with the rest of them, I don't know. I got nothing, and again, not a financial advice, just an idea of things to look into. And then final piece that I have promised that I was going to cover is that what's happening in Vancouver. All right, so Vancouver unveils new tax for foreign home buyers. The reason I wanted to share this with you is because I think it's very important to understand that when you own property, you're sometimes at the mercy of the lawmakers, right? And so now, if you have purchased a property in Vancouver and Toronto, because they're experiencing skyrocketing prices, I'm going to cover that. As a foreigner, you're going to be paying a whole lot more. So, foreign home buyers in Canadian city of Vancouver will face an additional 15% transfer tax beginning next week. There are large concerns about growth, skyrocketing prices in housing market in Vancouver and Toronto, and they're basically saying that the foreigners are paying a huge role into this, predominantly blaming the Chinese buyers, specifically for Vancouver buying high-end homes. The benchmark price for the detached Vancouver home increased 39% in June from a year earlier. That's a huge increase. That's a huge increase. And if you bought in Vancouver prior to all this happening, congratulations if you have made some money. That is beyond exciting. However, if you're a foreign buyer and now you own things and you want to be able to transfer, well, now you're going to be actually paying a whole lot more. So based on the home tax value, foreign buyer would have to pay additional like $250,000 for those average homes. Now, the provinces also allow City of Vancouver to impose an annual vacancy tax on some residential properties that are left uninhabited. So if you have a secondary home or vacation or that kind of stuff, you're going to be paying a vacancy tax. So what they're basically saying is we want no investors, at least not short-term investors. So watch out, Airbnb folks. We want homeowners, and maybe if you're an investor that rents long-term, that this thing is occupied, and you're not a foreigner, we definitely want you. Everybody else, you're going to pay through the roof in order to do business with us. And, while I understand what they're trying to do, I think that's going to be really bad for business for Vancouver for a long while. And I think things are going to slow down. And unfortunately, they're doing that now during the crisis. So I do expect Vancouver prices to drop severely, more than anywhere else. And, I think recovery is going to be really, really rough. So a lot of people will lose a lot of money in Vancouver, Canada, especially if they're having real estate. And my sincere apologies for those that are going to see that happen. So, all right. Let's wrap up. The preliminary data earlier this month suggesting that foreigners were involved in 5% of real estate transactions in metropolitan Vancouver, accounting for 6.5% of the overall value. The data was collected over a period of 19 days. 20 days, 5%. I don't know if 5% of buyers, can push things that much, but what the heck do I know? So anyways, the individuals who aren't citizens or permanent residents of Canada must file an additional property transfer tax return at the time the transfer is registered, or they will be paying some hefty fees a fine of 100,000 Canadian dollars or 200,000 for corporations, and up to 2 years in prison. So if the money is not an object, maybe they will imprison you. Like I always said, there are always a price to pay, and if you are not going to pay attention to just fear or following the laws, and paying the fines is not a big problem for you, well, maybe jail time is. So this is it. This is all we have. The chat roll is still, like I said, this is pretty new, so the chat roll, there's not much happening, but I hope you will join me tomorrow at onedealaway.com/live. We're going to go live at 7, covering some of the things, and I have some information about real estate and other pieces that I want to cover with you. So thank you for watching. Join me tomorrow. Make sure you watch before others do, and don't miss some of the important news, because I think with knowledge comes a lot of power, and when you study and you understand, you can't be taken advantage of, but you have an ability to take advantage of the situation. So as they say, don't ever let a single crisis go to waste. And we are having a huge crisis. And my question to you is, are you going to waste it? Or are you going to get wasted by it? Even worse. So let's take advantage of the situation of what's going on. Come join me. Let's study. Let's learn. And thank you for watching. Until next time, stay forever money blessed. And do remember, you are only one deal away. Bye, y'all.